Good morning, gang. Good afternoon, good evening, or good night, depending on where you are in the world. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed is financial advice. It's for educational purposes only, and it's my view of the markets. Now we've got that out of the way, I thought I'd record a really quick update today, because I don't think I'm going to have time to do one tomorrow. So I just want to talk you through, obviously, what's been going on, obviously this pullback that we've seen, obviously this bounce that we're seeing now, and effectively what setups I'm looking for next. So if you cast your mind back to last week's video, which was on the Wednesday, would have been around here, okay? I made it very, very clear, There's only a couple of areas that I was interested in. How I work, as you guys know, is I have areas where I'm interested in trading because I have high confluence. And if and when price gets there, does it give me a setup? Okay, so obviously the point of case was obviously the long that we got from down here. You know, we talked through that last time on stream. And realistically, the next place I was interested in trading, as you guys know, was here. Okay, potentially. And it wouldn't be for a long, because I personally don't long breakouts. And I was talking about this being probably, if this starts happening and this starts getting up here, what you're going to start to see, especially from the influencers out there, you know, your cryptos of the world, in fact, I'm pretty sure he did even post one, is, you know, they're going to start looking at this and saying, oh, Bullflag, you know, Bullflag. Whatever pretty made up chart patterns, you know, and targets and everything else that go along with it. Now, personally, I don't trade chart patterns. In fact, if anything, I counter trade them because normally they offer a better risk to reward. However, we didn't get there. Okay, we didn't even grab this liquidity here. So I wasn't interested in trading. And this is the simplicity of it. Okay, so this whole move down, I didn't trade. Wasn't part of any of my morning streams. We front run the 786, we front run this liquidity, we front run this channel. Okay, so as I said last week, I was looking, if we get up to this channel, what happens? The big question is, ideally what I'd like to see is a breakout, and then a failed attempt, and then I'd look for a short. If that didn't happen, and we came up here, and it did genuinely break out and held and carried on going, well, that's great, cool. My swing long runs longer. Great, and that's as simple as that. So I want to see price come into my area of interest. I then want to see my setup criteria, e.g. in this case, trapped longs, and it fail. Then I can look for shorts. But in the end, it didn't even get up there, okay? So, does this mean it's completely weak? Does this mean, you know, it's useless? No, it doesn't. It just means it didn't come into my area of interest. It's as simple as that. Is that area of interest still active? Yes, it is. Okay, so I'm still curious to know what happens here. If price rallies from here, gets out of here, and then fails, then yes, I would still look for shorts. Nice and simple. Okay? But in the end, what happened was we had a sell-off before a liquidity sweep, before the 786, and it sold off and took out these lows, okay? Now, this, for me, was a long. So this, if you follow me on Twitter or know in the group, nice and simple, this was a long. I'm still sat in this long, by the way, because the reason why I'm still sat in this long is because we've got a very nice potential trending day setting up on TPO. But quite simply, I was just looking at this, and this is, there's two different times on this. So we've got this one here, which was part of last Friday's plans. So last Friday, we'd not even made these highs over the weekend. And I was very interested, as you can see, in this area here. Now, the reason why I'm interested in that area is twofold. There's quite a lot of reasons, in fact. But effectively, if we look at this volume profile, now this volume profile, as you saw me draw on last week, this is a trending volume profile. Okay, so effectively, from the start of the trend up, it comes. Okay, you can do a range one, which would be effectively you take everything into account. Again, this is a high time frame example. So if you go all the way back, basically you want to incorporate all this back here. So that would be a range volume profile. In fact, look, funnily enough, look, we're coming into value area high now. Okay, now this one that I've got on here is trending. So this is from the base of the move coming up. So I'm looking at fresh volume. This is what I'm looking at, a trending volume profile. So I'm looking at fresh volume levels. Okay, not volume that's back here that's been tagged already. Okay, and at the time, you can see where these screenshots come back. You can see these screenshots here. You have this high volume node down here, okay, which has changed now because obviously price has come back to revisit it, and it actually turned into a value area low of the uptrend. But effectively, I was interested in this high volume node here, and you can see this is on Monday's plans as well. This is after the highs were run over the weekend. Again, I wasn't fully expecting this to break down. I didn't know it was going to do this. All I knew was where I wanted to trade, okay? If it came into my area of interest, I would then look for a long trade. As simple as that. If it came into my area of interest up here, I would then look for a short trade. Simple as that. Really, really clean. Okay. So again, these are the plans I'd laid out. Didn't catch the short. We got the long in the end. Okay. So quite simply, high volume node down here. We had 2 naked pointer controls down here, and we had an internal 382. So if we do this again, this is using a bit of Elliott Wave Theory, but a bit of an internal 382 here. You'll just see this nicely on that 382 sticky cluster. Okay. So, you know, people will look at this in many different forms, whether you trade like me, whether you trade like ICT, supply and demand, any form of trader, right? What have you got here? You've got a consolidation before a breakout. Okay, so that's the last consolidation before the push up. Below that, there's not much down here. Okay, there's not much down here. Effectively, below these lows here, it's a thin area. Okay, it's a thin area. You can see it on the volume. There's nothing within this. Thin. So all I'm looking for is I'm looking for a sticky cluster. So that sticky cluster is likely going to cause me the reaction. Hence why I'm looking in this region down here. Okay, so a decent confluence down here. It came down. Something that I normally reserve for the members, but I'm going to share this with you now here. So if we come down to a really low time frame, you'll see this. And this is something to look for. This is normally an ending structure. Okay, and when you start to see an ending structure, you can then start to see, you can start to look for the mean reversion trade. Okay, and it's just really simple. When you're coming into a major level of, in this case, support, you want to see this kind of structure. Okay. You want to see 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Now, some will consider it as a diag. Absolutely fine in terms of Elliott Wave. Yes, there's, you know, people call it a wedge, whatever. It makes no difference what you want to call it, but it's something that you will see time and time again on any time frame when you're coming into a major level, if that level is going to be relevant. Okay, it's pattern recognition, but not as in simple, basic trader patterns that the 12-year-olds out there teach you. Okay, it's just something that you will see naturally. Now, the icing on the cake with this, and the reason why I took this trade, luckily I'm an old man, so I have to get up in the middle of the night for a pee once or twice. And that's the only reason why I caught this trade. But this had come down through the night. Okay, so this was what? This was 11 p.m. UTC, so this is midnight for me. Came back up, daily opens up. Now, Asia session comes online, and what does Asia session do? First and foremost, it just comes down and runs the liquidity. Just as a stop pump. And then from that, we get this really high momentum buy up. So this is a positive sign. So if you are going to be right with this idea and you are going to take this trade, you don't want price coming back down to revisit this, especially with this kind of momentum. Okay. And again, you can reconfirm that momentum by looking on something like a TPO chart, and you can see all the bachelor single prints. Okay. So for me, it's a fairly safe trade now. Okay. My TP1 was at monthly open. These highs here, equal highs. And there's also a previous day point of control here. And now my stops are in it into profit. I've had a TP1. Now I'm quite comfortable no matter what happens next. And this is the beauty of being in these kind of positions. So what happens next? Well, unlike a lot of people, I'm quite happy to say I don't know. But I do know where I'm interested in trading next. And this is what I'm going to go through. So if we continue up, and this continues up in a straight line, first and foremost, you got weekly open. You need to pay attention to weekly open. Okay. In itself, it's not a major level, but we also do have an internal 886 on that level. And you guys know me, if you've been watching me for a while, you guys know me, I love an 886. Because an 886 has called many tops and bottoms. Okay, so we've got an 886 on weekly open. So bulls need to flip that level if it's going to continue being bullish. So what happens here? Again, it's a question mark. I don't know what's going to happen there. What happens there? Now, if it can flip that, then this area of interest becomes active again. Now, this is something, again, I don't leave a limit order up here. I'm not going to go onto my exchange and go, right, I'm going to put a limit order in and I'm just going to sell that. Because I don't know what's going to happen in there. That just lowers my odds. Yeah, it could come up, it could kiss it, and it could just reject. Or it might front run it, or it might just go straight through it. I don't know what's going to happen. So I need to wait and see. I need to wait for price to come into this territory. And if it comes into this territory and then gives me a valid entry reason, i.e., for example, we break out, we see a load of buyers up here, and then it folds over. Well, what happens to these buyers that are up here? Well, these guys are now offside, so what do they have to do? They have to unload their position, which then gives us a bit of a sell-off. So therefore, I get a short trigger here. Great. Now, if it comes out and it just continues grinding up and we continue this trending day, then I will look for higher prices. So if we do come higher, the next regions I'd be interested in looking at, once again, the 886. What happens at the 886? If we come up here, do we have some nice reaction in here that gives us some sort of short? Cool. I will look for a short. I'm not going to be looking for a long up here. But I'll be looking for a short if it gives me one. And if it doesn't give me one and we flip the 886, quite simply, new all-time highs. And then what happens up here? Again, that's your next question. What happens? You know, do we get above and then you get a load of breakout traders and then they get the momentum and follow through? Cool. Always ask yourself, what are the aggressive participants trying to do? If they're all market long up here and price keeps moving up, well, they're doing a good job. Let them go. Let it continue trending. Look to scalp the trend. But if we come up here and the aggressive participants start failing, and yet despite longing, and it starts to break down, well then, yeah, cool, I've got a short trigger. Nice and simple. I don't know what's going to happen in these regions. I don't know if we're going to get to these regions. All I know is if it gets to them, I then need to know what I want to see. And if it goes above that, then 115k is my next major level. And I've talked about that 115k for about 6 months now. Now, on the long side, what if this fails? Okay, if this day retraces, that's not going to be a healthy sign, is it? Especially because the whole move up is thin. It's thin. We've not really built any structure on the way up. It's just thin. All we're doing is pushing through, creating bachelor single print. So if we do start to fail, then it can come through this just as quick as it went up. Okay, that's not a healthy sign. Now, I've got no intention of shorting this as it stands now, and the guys in the members in the membership know that I've got no plans on shorting this as it is. So if this does roll over from where it is right now, it's not my trade. It's as simple as that. I don't care. Because my rules state, if we have a trending day, then I'm not looking for shorts until I see significant weakness or higher resistance levels. It's as simple as that. But if it does roll over, then that's going to be not very healthy. So if we do lose these lows and it comes down, my next question mark is this. And I'll be honest, I'm not actually a big fan of this algo down here because I don't really like the structure that led to it. So if we do come down here, again, question mark, what happens? What happens in this box? Do I get a setup that I can take potentially as a scalp, which could turn into something more? Then yeah, cool, I'll take it. But if I don't, then I'm not going to stress. And if it comes lower than that and starts heading towards, once again, as we always say, bull's last chance, the 886, roughly around that psychological 100k mark, then, you know, we might get a reaction there, but we'll see. And if that fails, then I'll be looking back down. And then it's a big question mark again. What happens at the channel? Do we just simply come down and run these lows and continue the channel? Could do. Or does it genuinely break out and start running lower? And if it starts running lower, then you've got to say, where's your next sticky zone? So we do that same concept. So we take on a volume profile from the absolute bottom up to here. I'm going to hide the other one so it doesn't confuse anyone. And now you can see, look where our volume is. There, around yearly open. You've got a nice big volume cluster there. If we lose yearly open, then we've got a thin gap here. Where's the next volume cluster? Here. Right there. So they would be my next areas of interest. This one. And if that fails, then I'll be looking down for this one. Okay? But once again, I wouldn't say blindly copy these and blindly trade these levels because we don't know what's going to happen at those levels. We want to see price come into those levels, and then if they come into those levels, then we want to see our criteria to take a trade. And if we don't, then we don't take a trade. Even if that means you miss a trade. Okay? Because if it doesn't give you your criteria, it's not your trade to miss in the first place. Just like this short here wasn't my trade. I had no reason to short here. So therefore, some might look at this and say, well, yes, but you missed that trade, didn't you? Yeah, oh, it was a great trade. Well, it might have been, but it didn't meet my criteria. So therefore, it wasn't my trade, so therefore I didn't miss a trade. I got my trade that I was looking for out of my area of interest down here. Okay. Hopefully you've learned something today. I've gone into a lot more detail than I normally share on these videos. So if you appreciate that, hit the like button and let me know down in the comments below. And until next time, gang, as you were. Bye-bye.